Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. Generally, we are looking for this scenario here, ABC to the downside, or an impulsive structure in a wave 1, 2, and then a wave 3 for much lower prices to come. Most common target for a wave B is between the 382 and the 886. Most common target for a wave 2 is between the 05 and the 786, taken from the high to the low of wave 1 or A, with the invalidation being price moving above the high here. Before I cover the corrective structures to the upside for a wave B or a wave 2, I first like to talk about these lows. You can see three lines on the chart: low number 1, low number 2, and low number 3. And on Friday, price moved towards the downside, and we wicked 2 out of the 3 lows. Or wicked, well, not really the second one, but we did wick the first one, a little bit of a reaction, and we came down again. Then you can see that the second low got wicked, but not really any reaction. Instead, price moved below the second low and the third low. It actually did not take the liquidity of the third low and decided to range over here for a short period of time before then moving towards the upside. And this low over here looks a little bit weak. And if you use the TPO indicator that Shirley mentioned during the live stream yesterday, you can also see it's a bit of a poor low, as we like to call it. The indicator is called time price opportunities, and if you then want to have a look at my settings, and here I quickly click through the different settings that I have, so you might copy it if you wish to. But what is important in this particular scenario is that at the low over here we don't have a row of single blocks, because that is what you prefer to see when we have a strong low or high. In that case over here you can see that price moved to the downside. We have a little bit of a wick and we got 4 single blocks above one another here, and if we look at the high, we have the same thing, multiple blocks over here at this high. And that is what you like to see when we talk about a strong, or a, in this case, weak low, where we don't have a couple of blocks above one another, a single row basically. So seeing this over here does increase the probabilities for price to take this low sooner or later, and that is also what I took into account when I thought of corrective structures to the upside, where this is the first structure I like to present to you, which is a flat. In this scenario, we are then looking for this to be a wave A, looking for a wave B to the downside, for then another C to the upside. Locally here, we have been ranging throughout the whole day, and we do still have this resistance area between 41.8k and 41.9k, which I think is very interesting over here for price to reject and move towards the downside back into this range, where we have the range point of control over here, which can be interesting support for this wave B, which means that on the Sunday we're pretty much moving towards the downside for then a bounce and a move towards the upside in a wave C, where we are then looking for an impulsive structure. If price moves to the lower end of this dotted line here, then the target area for a wave C, taken from the low to the high of A to the low here, is pretty much in confluence with this resistance box here between 43k and 43.2k. And just above this level, we also still have a weekly at 43.950. So that is also interesting resistance for then a move back towards the downside to take the poor low here, right? In a wave B, most commonly we are looking for a zigzag structure. Most common target for wave B, which is taken from the low to the high over here, is between the 1.236 and the 1.38, which is in very nice confluence with the golden support box here between 38.6 and 39k. And what I would then like to see is price making a good strong low before then a move towards the upside, where we want to see an impulse in a wave C, 1, 2, 3, 4, and eventually a wave 5, where we also have the daily gap here, which is likely to be filled if price is going to take this high over here. And we also have a target box, which is here sitting between 45.9k and 46.7k, which is a very interesting resistance for a rejection and a continuation to the downside, and then a bigger ABC or the impulse in a 1, 2, and eventually a wave 3. In the bullish scenario, we are not going to take this low anytime soon, and instead we're looking for an A, B, ABC to the upside in the potential double zigzag scenario here, where we then look for a wave X and another zigzag to the upside in a wave Y, where again I prefer to see the daily gap filled and price moving to the blue target box over here for then a rejection back towards the downside. Another scenario where price is not gonna take this low is a simple zigzag in an ABC, and usually simple zigzags ABCs are more common than a double zigzag structure in a WXY double zigzag. The problem I have, however, with this scenario is the first move to the upside, specifically this wave 2 over here, because this wave 2 is over 5 times longer than wave 1, which is very uncommon for a wave 2, and it increases the probabilities that the range that we are forming here is a wave B, and therefore it increases the probabilities for either an ABC in a WX and then a wave Y, or it increases the probabilities as well for this flat scenario where we also have an ABC looking for a B down and then a wave C towards the upside, which I think is very, very attractive. So if we then look at the probabilities of the different scenarios, then on the micro here, currently the probabilities are higher for price to take the lows over here. I do think it would be nice for price to first hit the order block, then move down to the point of control of this range, or at least find support inside this area, for then a move towards the upside where we got to pay attention to the resistance that we have and of course the range that we were in over here, right? We have the point of control in the middle and we have the resistance area over here of this range with the value area high at 43.3k. So pretty much this would be a very nice scenario, and then when price is here we got to wait and see what we get. Potential, as mentioned here, of hitting the 15-minute order block first before then a move down to the range point of control, where we do have to check proof of support, right? Because if we get big candles to the downside, well, we might already look for the low, but at the moment on the lower time frames, this move to the downside here looks corrective in a three-wave structure. This also looks very, very corrective price action, not impulsive, so it does increase the probabilities to take this high sooner or later. On a low time frame, if we zoom out, then the probabilities are higher to take this local high eventually, where then if price moves towards the upside back into the previous range here, we want to see proof of resistance, of course, for then a potential move to the downside in a flat or a potential WXY. These are the two higher probability scenarios. Probabilities are there to take this low as explained because of this being a poor low, right? If not with this retracement and then an ABC like this, for example, right, then likely at a later stage with a wave C or a wave 3 to the downside. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.